Welcome to OptionsBrewTV. I am your host, Lex, and today we have with us Mr. Blair Nightingale. Hello, Blair. How are you?
Hey.
Welcome to the show.
Great to be here, man. Appreciate it so much. It's a pleasure.
Thank you. So Blair works with TradeWay, or he might even own it, or he might even invented it for all I know, but he's going to tell us about that, right? So TradeWay.com, and it is this guy right here in the bottom of our screen there. Is that right? TradeWay. Did I get that right?
One. Yep.
All right.
Yep.
So please visit that. He has a great story, and I really want him to tell it so I can shut up. Blair, tell us a little bit about your background, because you started out as a student, I think, and became a coach or mentor. So your path is really interesting. And people can do this. And I think your story is awesome. So give us a little flavor of how you started and where you are now.
Yeah. That's really hitting the nail on the head, I think, for what I like to do and why I am a coach, is because if I can learn how to trade, if I can learn the markets, then anybody can. Because really my background, first of all, it's not in business, it's not in finance, it's not in math, right?
Mm-hmm.
I was in the music industry. I mean, I went to college, I studied music. I was in the music industry. I was in in the mid, 2005 through 8. I was in a band that was doing very well. I had a massive personal change, my spiritual life, and just left the industry and ended up going overseas and doing missions and serving people and living with the poor. It was as far from finance as I probably could have imagined. And yet, as I got older and like so many people, we talked about a little bit earlier, you're looking for more opportunity, and how do I put my money to work? And what are some of these things that, maybe I've heard about a little bit, but I really don't know how to do it. I met some people from TradeWay. In fact, at the time I met a trading coach through a friend who was already with TradeWay. And that was my introduction to the world of finance, stock market, which I knew nothing about. I truly knew nothing. I would have known what a 401k is to some degree, what a share of stock is, but really, like I think so many people, I would not have had knowledge about the stock market that incited confidence. Certainly not to be an active participant in the markets.
Right.
And that's one of the things at TradeWay that was big for me. And that's who we are. That's what we do, is teaching people to actively trade in the stock market, but really breaking it down for folks that don't have that background. Now we move into advanced stuff, right? We do all levels of experience, but we really do start with a lot of folks who are right at the beginning. And that's where I was at in 2015.
So in that short time, right, from 2015, you're telling me that prior to that, you really had very little knowledge of the inner workings of what is considered a complex space.
Yeah.
Right? Financial markets.
It certainly can be. It certainly can be. I think one of the ironies is that, you begin to learn the markets, and once you learn a system, even just technical analysis and following patterns and things like that, it can seem simple. Right. And then it gets complex. And somewhere in that journey of complexity, we've got to return back to a spot where we keep it simple. So I think there's a full circle there, but absolutely. Yeah. I had people who gave me that time compression. You've got 30 years, 40 years of experience. You've got some coaches that you've already been teaching, and now they've used that time compression, because it's a multi-generational company. It's a family company. It's not my company. And then I come along, almost, if you will, the third generation in the evolution of TradeWay in some ways. And then I got the next level of that time compression. I get to learn from other people's mistakes, so I don't have to make my own. Granted, I think I pretty much made every mistake you can possibly make. Some rules you can be taught, and some you have to learn yourself. But.
So before you landed with TradeWay, or in TradeWay, or however you want to say it, you had to dabble a little bit and make those mistakes, right? So, you did some things that I'm going to figure this out on my own, and lo and behold, whammo in the face, losses. I've got to figure this out better, right?
Totally.
Is that sort of the path to TradeWay in a way? Everyone tries it, right?
Sure. Yeah. No,
Yeah.
and I didn't do any active trading until I had been introduced to what that would even mean through TradeWay. Okay. I took
Okay.
their introductory event in Philadelphia in 2015. It's what we call step one, start your journey, which is exactly what it is,
Sure.
right? It's an introduction to technical analysis, stock trading, a little bit of options. What are they? How are they connected to the stock, the derivatives, all that kind of thing.
Mhm.
Just starting to get an idea of what that is and why we would trade that. But yeah, I mean, something simple of, hey, there's something called a stop loss. Bet you
Sure.
maybe a lot of people never heard of a stop loss. Okay, well, that's cool. Didn't know you could use that,
Mhm.
but I don't have to use that, right? I don't have to. I could, I should,
Right.
but I don't have to. It's up to me, you know. And I think a little bit of that, it gets a little bit deeper from there, Lex. But the psychology, obviously, of you know, if I can keep those losses small over
Sure.
time, right?
Mhm.
That's how I'm going to get ahead. I like to tell people it's the goal of the trader to make money, but it's the role of the trader to manage risk well.
Mhm.
If you'll do the second, then you make the first one possible. If you
Sure.
chase the first one, you usually throw the second one out the window.
So
And
true.
that's a hard lesson for somebody stubborn like me to learn. So yeah, I had to take some bumps and discover what kind of trader I am as well. So yeah, I
Nice.
really did start out learning from other people and then
Mhm.
going, okay, I got to walk through this journey myself as well and make it
Nice.
my own.
Right. Well, you made a good point, and I really want to emphasize it because, um, my past is we had a trading firm, right? But it was a market making firm, so it was floor
Okay.
trading kind of thing back in the day, right? And you said something really important: the risk management part of life in this business, and I can't emphasize it enough how important it is. We used to teach that we could hire just about infants to get into things. They can open
Yeah,
cabinets and get into trades and figure out that's no skill. The skill is how do you manage that inventory and become effective at getting out of it.
of
That
course.
was the real skill. And I think you hit on that just now, which I got to tell you, I couldn't agree with you more on that. I think that's a skill that's sometimes really hard to learn, but you really have to focus on that discipline to be, ultimately successful, in my opinion. So,
I can't agree more. And the
yeah.
more I've traded personally and the
Mhm.
more I've coached other people, you know, I tell a story sometimes. I was doing some mentorship with a particular student. This is probably about a year and a half now. And just to encourage some folks out there, you know, maybe you've been trading for a little while already, and you know, you're like, oh man, I'm just, you know, maybe I'm okay at it, maybe I'm not great at it. I wish I was better at it.
Sure.
Wherever you're at in the process, you know, I'm working with this student, and we find that if half, okay, half of the positions that he stopped out of
Mhm.
took a loss, if he would stick to his originally defined stop out for even half of those half, so 50 of 50%, right?
Sure.
He would actually be ahead, profitable, net profitable in his trading. So, point being, here's this individual I'm working with, and he's going, man, Blair, I don't know. I don't know if I'm not cut out for this. Maybe I'm just not getting it. You know, I'm discouraged. And we're looking at the data and we're going, well, actually, if you would just stick to a small percentage of your trades,
Mhm.
a little bit better on your stop outs, managing risk, right? What we're talking about.
Sure.
You don't even have to go out and find more trades. You don't even need better setups per se. You don't need to really
Mhm.
do anything except you need to cut those losses where you said you would
Mhm.
just 50% better. Now, maybe we can do better than that even, but if we
Right.
just did that much, wow, I mean, you know, a lot of people are making money, and unfortunately, we're just giving it all back, you know.
Sure.
And so we want to have good perspective on that, and that's just something I've had to learn over time, you know,
Right.
doing that very thing, you know,
Yeah.
making the
That's
money
great.
and giving it back.
That's great. You wanna give a few you wanna show some examples of some setups or whatever you're gonna show with the screen share? Does that work?
Yeah, for
Okay,
sure.
let me get that in here. I love the colors. That looks great to me. Now, what are we looking at? Explain what all this is. So,
Yeah, so I mean, this is a home screen.
Mhm.
This is charts by TradeWay. So this is a charting software that we coaches and the students over here at TradeWay use.
Okay.
Lots of features here. Yeah, I won't go over all of that right now. This is just our home page. It's really just giving us some fundamental look at, obviously looking at the indexes and then the sectors,
Sure.
heat maps and stuff here on the right side. The big thing here that I like is that, when a student sets up this platform, and if they're in our program, they get access to this platform.
Okay.
You could set up your brokerage account, right, with Tradier. You could set it up on here. And what's going to happen is it's going to link. And so if a student chooses to do so, they can share their trades with me, paper trades, real trades, whatever it is. And as a coach, that just makes it tremendously easy for me to be able to go in and go, like I just mentioned on that student I was just talking about. What are we dealing with? What's the data? Which, I was going to say it. I just didn't want to rabbit trail in what I was just talking about. That student had actually tracked the trading, right? They had data. And that's something that I think, we like to talk over at TradeWay about. Is trading your hobby or is trading your business? Because you're going to do something different. I mean, hobbies tend to cost money. They're fun. You can do them. I like to call it getting high in the market. You can do that. Trading is fun. It can be really not fun if we're not doing well, obviously. But the difference in large part is data. And this makes that part of it very easy because, like I said, with that one student, you get a chance to look at the data. I'm testing a new strategy that I've not done before right now. And, I'm just constantly going over, all right, I've done 15 of these, 10 of these, right? What's it telling me? What's going to happen in the long run? Maturity in trading, I've found, I'd be interested to hear your thoughts. It's maturity in trading is measured over time.
Sure.
It's never measured in a few trades. Anything can happen in a few trades, but really over time is when it's measured.
Right. No, I agree with that. I think, it kind of goes in all walks of life too, right? I look back when I was when I was a young man, I thought I had all kinds of experience when I was, in my younger years, but where I am now versus where I was, I'm like, God, I didn't know anything. Right. So it's just amazing. And this profession of trading, it takes ultimate practice because every day is different. Right.
True.
Now you can have a mechanism in a rule of progress that you follow, which is great. I love discipline. But each day is going to give you a different hand. You're going to always have a different card to hand to play. And you have to know your triggers that you've developed over some time to be able to behave and respond to it, So yeah, I think that's very true. This is
I couldn't agree more.
Yeah.
And if I had to say off the top here, as we're looking at a chart, we're just looking at the SPX here, but that to me is the beauty of options. I think that's why options traders trade options. I mean, yes, we've got a degree of leverage here, but whatever aspect of options, whether we're buying to open, we're selling to open, we're doing more complex spreads, neutral, directional, it gives flexibility for two things. One, what I call market season. What season are we in? What time is it? I tell people all the time, when the season changes outside, you're not going to wear the same clothes. And at its extremes, heat of summer, cold of winter, it's much easier to know I'm going to wear this, I'm going to wear that. But we've also got fall, we've also got spring. We've got times where the market is just in transition more often. It's changing. And then it's a little bit back and forth, isn't it? One day I'm wearing pants, the next day I'm wearing shorts. It's not the same. Well, when I look at options, that's where I think we're at. I think we're more transition. I mean, you can look at the screen in front of us here, and we had this just phenomenal, basic, uptrending, bullish market where a lot of people are going to go, whether they're experienced or not, I'm going to take bullish positions. And in many cases, I'm going to do just fine because that market is relentlessly moving up. Well, obviously with interest rates and some other fundamental factors that we see changing in the economy right now, we're just seeing that transition in the market. So one of my biggest things has been talking to students about, and this is what I would say to folks out there today with options. You can get into all of, how do these specific option strategies work? but what tool am I choosing to use right now and why? You know? So, for example, I mean, when we've got this consistent technical trend here, even off this 100-day moving average where we've been for quite some time at the time, right? Just even moving through here.
Right. Is that the blue line, Blair?
I'm sorry?
Is that the blue line, the 100-day?
It's this dotted red one down here. I'm sorry.
Okay.
I sometimes forget. We do so many instructional webinars, and everybody has their moving averages maybe a little different. We've
Sure.
always done that red, white, and blue 10, 20, 50, and then you've got that perforated 100-day moving average. No, the market was strong enough to use that 50 consistently, 50, 20, 50, 20 down, and then it breaks through. Where am I going with this? We have to look at the season and say, all right, what's working for me right now and what's not working for me? And one of our coaches says all the time, let's just do less of what's not working and more of what is. Now that sounds oversimplified, but I think sometimes traders can try to use what they did instead of what they need to do. And where we're at right now, let me extend this again here. Make sure I got some space.
Okay.
Where we're at right now is just reminding folks that, first of all, with options, we can trade directional and we can trade non-directional.
Sure.
Now, to more advanced options traders, that may be an obvious statement. And hopefully that's the case. It's certainly become more obvious to me over time that, when things are back and forth, the volatility is higher. Obviously, I can switch over into thinking about I'm selling, right? I'm doing more of the credit spreads. I'm definitely looking at condors. I'm looking at more complex strategies like that. We're also focusing a lot on the short-term debit spreads, right? Just getting 1 or 2 days of movement out of a pattern is something that is much more effective right now because we just tend to see a lot more whipsaw in the market, right? Things are moving back and forth pretty consistently.
Sure. Let me ask you a question here. So what would you say? Might not be an answer. What would you say is your average holding period? Are you guys more day traders, swing traders, even farther than swing traders, or somewhere a mixture of all the above?
We're definitely focused more in the swing trading time frame, right? Trading swing highs and lows off of a daily time frame.
Okay.
Now, again, that's part of the point here is going, okay, that's true, which for us is, has been typically somewhere between 2 to 3 days to 2 to 3 weeks.
Got it. Okay.
Now, somebody may be doing more monthly expirations, selling credit on a monthly expiration or something like that. But really, that's about the window of time that folks are doing. Now, I think in this environment, when people are trading, because we've got folks that, and you've probably seen this a lot over the years as well. I mean, part of the process here of learning is, okay, I've got these different strategies, right? I can do different things because I have the flexibility of options. But what fits my lifestyle? What fits my personality? Right. Some people don't have the patience. Some people, you know what I mean?
That one.
And maybe you can grow in that. I tend to trade a lot shorter term. I just do. 1 to 0 days to expiration in some cases. I'm fine with that trade-off because I would rather take a little bit less, in some cases maybe a lot less, and do multiple trades at a shorter time frame. I don't have to manage myself as much when I'm doing that. So I can get outside of who I am and I try to grow as a trader, but I also have realized the importance of just knowing, okay, this is just what works better for me. And, I've found that some of this conversation, when I talk to students, it's like, hey, yeah, but get me into the pattern, like show me the meat, man, and that's all really important.
Right.
But a lot of people learn that stuff pretty quick. It's this other stuff that I find that is the most self-promoting or self-defeating behaviors that a trader has. what works for me, what fits my personality.
Mm-hmm.
So yes, we do shorter time frames for sure. Some people are doing really quick 1 and 2 day trades, typically
Right.
not focusing on a day trading approach. And, unless the market, the market's melting down today, so I opened up something this morning as it moves further down today.
Mm-hmm.
That maybe is something where I go, all right, this is enough for me to just get out today.
Sure.
But it's going to typically be longer than that for most people. And then other people are going to say, hey, in this wild environment, I'm going to get a lot of cushion on a credit spread. I'm going to sell pretty far out. So let me
Sure.
go back here, and I could even use, the indexes. We spend a lot of time looking at indexes because we focus on what we call market tone, overall market tone, as they say. Rising tides tends to raise all boats, right? And the opposite is true. So I just want to get a sense, is the tide coming in or is it going out, right? If it's coming in, I might be more inclined to buy,
sure,
to open. If it's going out, I may be inclined to do the opposite.
So what do you gather from these tea leaves here that we're looking at? Does this tell you something in terms of initiating an entry spot here?
Yeah, I think what we're looking at, and again, an entry spot for exactly what, right? So if I was looking to go short on the market right now, I definitely think the weakness is there. We're putting in a lower high here for sure. Now we just put in a higher low, which is why I have this line here, but which was really our around our 50-week, our 20-week moving average. I think it's really sensitive to interest rates. I think it's really sensitive to earnings right now. We're starting up in earnings season. I would tell students right now, if you're looking at a chart that is in a nice solid downtrend, nice and weak, it's getting killed, and this thing's going to close below this 5 or this 10 and 50 right here, I'd look for that close below it, not just a move unless it really drops today.
Sure.
We got some comments from Powell later today. Who knows? That's probably going to cause a little bit of volatility on the day at least. But it's looking soft to me. I don't trust that, we got 70 points the other day, boom. And then the next day it struggles. Today we're down already. I'm just not trusting that, which is why students are taking smaller profits in just a couple of days. What do I see in the tea leaves? I see weakness. And if we close below this, I would look for something on the short side for just a couple of days, unless you're looking to do something longer term and you can sell some credit up in a higher area. I put it here as an example on this chart. You might do it on an index, obviously looking to be less directionally sensitive because of the back and forth. Especially if we break through this line here, then I would definitely be more comfortable even doing some selling some credit up above.
I hadn't looked at the market, once we started talking for a while, but I know when we opened, I was on live, and the market was pretty strong with the Tesla, right? So the NASDAQ was up pretty good. When you said that, I'm like, oh my God, did it sell off? And sure enough, I'm like, golly.
And that's the thing. And I said this to students, because we're in that transition, right? We're in that transitional season, and obviously, we've seen a massive bull run in tech in particular. It's driven a lot of this recovery.
Right.
Obviously, we know our SPX is more heavily weighted to the tech stocks. It's not a majority weight, but it is a heavier weight. So when I see tech slide, I don't get too excited about the S&P moving up, which is the index we typically focus on, that broader index. But this guy hit the 20-day earlier today, right away. And I told students yesterday, I'm looking for a retest of that 1400 level, essentially, which is where this thing's been going sideways and struggling. Until this thing really catches some steam for me right now, I'm not trusting a lot of bullish positions to the top side unless, and this is some things I could show. Unless I'm seeing things that are really outperforming. Right. And that's what I'm telling our students that are stock trading and they don't want to sit on the sidelines,
So it looks like you can trade off of these charts. So I thought I saw a buy and a sell.
Yeah, absolutely. Okay. So let's just peek at that for a second here. This
Sure.
is our community page. So this is something that, for example, when somebody's in our program, we're posting in here every morning. You're waking up in the morning, you're getting our thoughts. What's going on in the market? Some trading lessons in here. What do I see? There you go. As you mentioned, the market was up nicely first thing in the morning.
Right.
Where are we seeing this going? What are we seeing? So here's some thoughts I had on that. And then I keep telling students, hey, if you really want to go directional here, let's, it's like I said earlier, it can be complicated, but let's try to keep whatever we can keep simple.
Yep.
As simple as possible. Okay. So if we're going to trade long, well, let's just look for a chart that's just crushing, right? Let's not find some, I tell people sometimes, yeah, we trade patterns, but if you have to squint and do a handstand to see a pattern on the screen, that maybe isn't the best one for us to go for.
Right.
So I just printed a quick list, what's some things that are just outperforming. So I'm just looking for something that's making textbook trend, higher highs, higher lows, right? It found a bottom, nothing we could do with it here. It pops up, flags into the moving averages, pops up, flags into the moving averages, and then really starts to rip and use this 10-day. I mean, this is just beautiful right here. This is something we're looking for all the time. Nice move up, straight back to the same average, pops up, straight back, pops up, and now we'll look for the same thing, right?
Okay. And where's your entry here? Is it somewhere lower on the graph?
Yeah, for sure. Where we're at right now, I'd be looking for risk management here at this 10-day moving average as a support level.
Okay.
So as I begin to see this thing moving up on this day, or even here, it's a little further away.
Sure.
In fact, that's a good lesson, so here's how we would begin to look at this. All right, I'm looking to do something long. First of all, I want to look at the tide. Is it coming? Is it going out? But I'm also finding a stock that's just doing really well regardless, so that doesn't have quite so much influence here. It simplifies my trading a little bit.
Right.
And then this is moving up at support. So I'm going to go ahead. I'm going to look for a stop out below that support line, below whatever the recent pivot would have been, which is right here.
Yep.
Okay. So I'm forcing the sellers to take some ground they haven't been able to take before I'm even going to exit this trade, right? So there's a very basic stop out. Obviously, if I'm purchasing this further from that line, I'm either going to have to put some kind of a stop order higher, which I don't really want to do. I don't really want to put it above that protection line.
Sure.
So to put it lower means I'm going to have to take on more risk. And that's what I tell students all the time. Okay. You're going to have to ask yourself, number one, what's the maximum amount I'm willing to risk on this trade?
Sure.
And what is the technical reason for placing the stop where I placed it? If the technical reason doesn't match with the max I'm willing to risk on the trade, then it's not a good trade for me, right? I'm not going to take that trade. Now, some people might want to buy it up here and they'd be happy that it gapped up, and that's great. You'd make some money on that. But over time, I find that that's not a reliable way to manage risk. And where I'm at now, I had momentum. I've got the gap. It's a bigger candlestick. I'm growing in momentum. Today, I'm flat and I'm down. So I would expect more so a turn off of that. Sure. I'm looking for something to pull back into that 10-day moving average at least, and then show me some follow through with buyers before I want to do anything with a stock like this. But a good example, a lot of oil and gas out there,
Sure.
like let's see, this is the one I wanted.
So when you figure out this entry point, I might be saying the wrong things here, and just correct me as I go. Are you going to initiate some sort of options trade to take advantage of your perceived direction?
Yeah. Okay. So a couple of things.
Yeah.
So depending on how somebody, here we're looking at a bullish bias, right? We have a bias. If we don't, we can't trade directional. So I could initiate a call option here, right?
Okay.
A lot of our students are going to do that. Now, right now, when we go back to what I said about the season of the market, somebody might say, you know what? I like to think about the tone of the market in terms of the road conditions, right? Your system for trading is the car. You are the driver. The driver is more important to me than the car. The car matters.
Right.
It's really the driver that matters. So you got to decide how well can I see right now?
Right.
And not tell the future, but how much risk can I perceive in the market, right? Higher volatility, more back and forth, what we call that whipsaw, less consistency. All right, that might be a little more slippery conditions. I can drive. I'm just not going to drive as fast. I grew up driving in the winter, right? You just don't drive, you drive, but you don't drive the same. Well, okay, right now, I would say a lot of our students are just not driving the same way. So what's something I might do? All right, maybe I won't do a call option here. I'm going to decrease position size, right? This is only a $40 stock. So that's, like I said, I would want to see buyers follow through here before I do anything. We're at the 20-day moving average. We're at this support level. We've got a reliable, consistent, repeatable trend, but I don't see the buyers yet. But if I did, all right, well, why don't I look at just doing a short-term debit spread? So looking at this guy, I'm going, all right, I don't know if I want to do a call option. What's one of the ways I could just limit that risk a little bit? Well, I can manage position size, right? Simple way to take a position, feel like I have freedom to expose my capital to the market, but I'm going to expose less. And at the same time, I don't need as significant of a move to see a good ROI on a position if I'm doing an at the money debit spread. Now I could do in or I could do out of the money, and there are risks and trade-offs for that. We tend to focus more at the money. But you could do that based on your risk tolerance or the confidence you have in this pattern. You say, well, you know what? I'm willing to do out of the money. I know my probabilities of making money on that are going to be lowered. But I'm also putting in less capital. And in that sense, I'm managing risk. So I'm happy with that. As long as the student tells me that they understand what they're doing and why they're doing it, I say, hey, go for it. Right.
So let me ask you another question. Do you find, I think I know the answer to this, but I'm going to ask anyway. Do you find that your students, when you say call option, I'm assuming they're buying these things, and in the professional world where I come from, buying things was only when you have to. You tend to sell things. So if you can sell a put credit spread when you want to be, and take advantage of the upside, that was tended to be more advantageous than buying the call. Now I know the risk parameters are slightly different, and volatility will come into play. High volatility versus low volatility. What do you see mostly with your folks? And I'm assuming account size has something to do with it as well. You can't sell a lot of things with a small account. So what do you see there?
Yeah, that margin hole comes into play. Yeah, and that's the evolution of what I'm where I would go next with this is to say, some of them want to risk some of that capital for that directional gain. Like you said, in the professional world, you're seeing, hey, if we're going to do options, we're selling. Right. And the longer I do this, the more attracted I am to that as well. The probabilities are different. I mean, it's just mathematically true. When I'm not trading directional, we have a system for defining conditions that are meant to optimize directional trading. You're still looking at a 50-50 setup in its essence, right? When I'm on, like you mentioned, a put credit spread, okay, so I'm not looking to capture a small move here if this thing holds its support. I'm going to go in here and I'm going to sell something down here, maybe below that 50-day moving average, right? Now, I may have to do more time to get a decent credit out of that, but that's part of being a seller of options. We got to, part of our trading is we got to find sweet credit. Just to say it, plainly, we've got to find an opportunity that's worth it. But yes, a lot of students would do exactly that. They would not come in here and trade it directionally. They would actually come in and go, you know what? I got a strong bullish pattern. I'm going to take a little bit of credit. I'm just going to get paid on this. I know I'm going to get less, but it's also going to be more consistent over time. Like you said, yes, account can have, there's barriers to that. Obviously, if I don't have as much for margin hold, I'm not making as much for return there. But this is definitely an approach that some would take. Again, it goes back to helping that trader discover where are you at and what is it that you're really wired for and what are you trying to do? Because we have students that, they may sell some credit, but they're really going to fixate on short-term directional trading. And they can do well, and then other people are going to come in here and that's just not what they're going to do.
Right.
I have become less directionally inclined
Okay.
over time. I just have.
Right.
Yeah, what's interesting though is, options are cool. I mean, you this is your world, right? So you can combine different options in very interesting ways. You're doing two
Absolutely.
credit spreads, you're doing two debit spreads, you're doing custom setups. Diving into that stuff can feel intimidating for folks. I
Yeah.
know. I mean, really, once you get the building blocks of this is why a put works, this is why a call works, this is what happens when we buy and sell, for verticals.
Mhm.
And then where we go with those building blocks, it's not too big of a jump, for people out there. If you don't understand those things to be able to get there. And like we said at the beginning, if I can do it, I promise you can do it.
Right.
And then I'm able to, I'm able to really raise the probabilities of my positions here in the market. So I completely agree. Moving into selling and really encouraging our students. Hey, I know the paradigm has been for a long time that you got to buy a stock and it's got to go up. That's just not the only way we want you to think about this. And if I could just maybe wind it down by
Do you
going
want?
back, go back to the SPX real quick
Yeah.
and just
Sure.
say, when we talked about something looking much more reliable and now we're not so much. We were down, we wedged, we went up. Now we're going back down. We're kind of going sideways. In this environment,
Mhm.
especially, I find that there's a lot of peace in going, hey, I have some other tools for the job here. I
Sure.
do not have to pick the direction.
Right.
And trading is never about knowing the future. And that's something
Mhm.
we remind our students all the time. Your technical analysis should get better,
Yep.
but it doesn't reach an arrival point when you finally know the future. It
Mhm.
reaches a strong point when you know how to assess as objectively as possible the risk that you are taking, why you're taking it, and then over time, consistently being able to get ahead by controlling yourself in the middle of that risk.
Right.
That's what trading is all about.
Yeah. No, that's well said. I couldn't agree more. So very cool. Well, God, Blair, thanks for coming on. This was really interesting. TradeWay.com, right? That's where the folks can sign up or go
Yep.
look at things, right?
Absolutely. Yep.
Okay.
You can head over to tradeway.com. If you guys are on Facebook, you're on YouTube, you can
Yep.
find us on both. We do live programs. I do a Market Monday, we call it, every Monday night. You're going to
Okay.
dive in with me. We're going to look at the market, some
Nice.
important trading concepts like we discussed today. So there's lots of ways to connect with us there.
Okay. And then and to get to you specifically, is that available on the website as well if they want to be in your room or whatever you want to call it?
What you can do, yeah. So, like I said, Market Monday, that's going to be me every Monday
Yeah.
night. So, I'll be hosting that. You can always reach out. I let everybody know. Support@tradeway.com. That's the easiest way. And you can
Got it.
always ask me questions. Students will write in questions, things they'd like to discuss, things like that. So, Blair Nightingale, you can send that over to TradeWay. And then you can always go to tradeway.com and there's an email button right there on that site as well.
Awesome. Okay. Well, thanks again. We'll talk after. And awesome show. Really enjoyed it. Thanks, Blair.
Appreciate you. Thanks for having me.